Hello there and welcome to this episode of Africa Business Weekly. It's time for yet another round of some of the biggest conversations that shaped the business community this week. Just sit back and journey with us as we bring you regional content from the East, West and Southern Africa. I'm Akin Obakeye. This week's highlight starts from West Africa as we explore how artificial intelligence is revolutionizing the workforce. For East Africa, Rwanda's central bank is maintaining status quo as inflation eases. Let's delve right into discussions with our first crossing to Palesa, who's on standby to give us updates from Southern Africa.
Data released by Crunchbase shows that global venture capital investments dropped 56% on a year-on-year basis. We caught up with Pratik Suri, the chairman of the Mesa Group, to unpack how MGR Investments are injecting more funds into African and global startups. Let's watch.
Opened a new investment arm called MGR Investments. So it is a launching pad, for the startups and, the people who have gone into Series A in specific continents like Africa, and then we talk about countries India, UK, and Middle East market. So, it will encourage the local entrepreneurs and the talent serving as a springboard in the next wave of technology and advancements in these nations. And our interest is basically to support those entrepreneurs and those startups, which are in the early stage and looking for the investments. So it's not only about the investment, but someone who is getting associated with us and we providing them funds should also get benefit with our robust network in the world. So our focus is not only giving funds to them, but also support them to grow their business and make a better valuation and a better things for the society and everything, and a better startup. And our focus is basically on the tech startups or anything related to fintech. And there are certain divisions which we have classified in the website.
Pratik, you're not the only one that's looking now at and going into the continent with such confidence. What are the markers that have given you confidence that this is the place to go to for future big businesses to come out and you're investing at the base? What did you see that's helped you make the decision to invest?
Okay, so for this, let's talk about Africa as a broad way. So, in my opinion, Africa is poised to be next hub of business development because, the new startup ecosystem, it helps, make the regions more pertinent challenges. And, it turns out to be in 2023, which sounds more of Africa in terms of developing nation than any other nation in the world in terms of developing and emerging markets. And as the globe moves towards 100% being connected world, developing an emerging market has to be the key, the key drivers in the startup ecosystem. And as leaders in business, one has to cope up with the pace of technology, with the leaps and the bounds. And if you talk about with the global technology and economy changing day to day, and the new technology coming in the market shares, it would be foolish to exclude Africa as a whole market mix. And we have done, significant amount of revenue generation in Africa in terms of, spread of the continent. And Africa is such a huge continent. And we see ourselves, we have a headquarters in UAE and we have operations in Africa. We see that, we still see ourselves in our Mesa group that has more potential left over in Africa. And we haven't covered in the entire Africa region. So, these are some of the factors which I see in the Africa market. We should invest in startups.
And speak to me of the people. I mean, you investing in a business is one thing, but you betting on people here. What kind of CEOs or leaders or innovators of businesses are you finding is also giving you comfort that you would find the right horses to bet on for the sectors you want to invest in?
So, yes, this is a very good question because, not only we see the financial or the idea or the prototype of a company, we take one-to-one interview and, discussion with the entrepreneurs and the founders and try to analyze, how much the founder has a potential to run the business and take it to the next level, how much hunger the founder has. And, we analyze it. We have certain steps we analyze by listening to them, how their plans are and what they will be doing with the capital which we will give to them. And once we understand the plan, then it makes sense for us. And also, not about only our funding, like I told you about a robust network, like we know the entire distribution, how we can make it happen in Africa market in B2B segment, which is very tough from the outside world. Because if you talk to anyone in Middle East or India, people want to do business in Africa market. Anyone you ask, people will say to you that we want to do business in Africa. How they want to do, they don't have any idea. So we help them, to do business in Africa with our network, and even the African founders with the same way.
Fitch Solutions expects Mozambique's real GDP growth to accelerate from 5.3% to 6.5% in 2023. For a detailed analysis of the agriculture-led economy, we caught up with Cilio Valley, the head of sales and global markets at Standard Bank. Let's take a look.
If you look the overall, outlook from macroeconomic perspective, the latest data, Mozambique closed around 4.1% from GDP. That was a considerable growth if you look from 2021 when we stood at 2.3%. So this is a result, of ending of COVID, a growth from, extractive industry, coal price, and also some on the floating LNG export proceeds perspective. So if you look from risk perspective, there is still supply inflation issue. Mozambique as well, we also affected with, heavy rains, and somehow there is still a bit uncertainty from oil and gas resumption, but from opportunity perspective, if there is a resumption from oil and gas, definitely it's going to be good from the country perspective. And that is well from investor side, also from local investor perspective. So just for Mozambique LNG perspective, that represents about around more than $50 billion if you look for both Area 1 and Area 4.
Now, Ciro, you talk of supply-side inflation. I'd love to get to dive deeper in this, actually, because, of course, inflation is very much central to a lot of our conversation, and particularly this week when we've just seen interest rate hikes coming through from the Fed as well as the ECB. I'd like to get an understanding of where Mozambique currently is in terms of the inflation picture.
Okay, if on that, if let's say we give a step back, right? If you look, central bank October last year, it's when they've increased the repo rates by 200 basis points, right? Which that has helped to reduce some inflation pressure. And then nonetheless, in February, we saw, increase in inflation. According to the latest data, there was a 50 basis points increase. So from 10.3 to 10.8, that's the March levels we have. We are seeing a persistent, price pressure, in food and transport. If you look, that food inflation is not only impacting region in Craig World, but also reflects the heavy rains that we're seeing in Mozambique. From transport perspective, basically there's an ability to maintain the subsidies that the government, has been doing from public transport perspective, and that as well is creating or adding more physical pressure. So we still believe that inflation still at, the risk remains elevated. From single to double digits, it's likely to remain at this level in short to medium term. So food and fuel would definitely play an important role here, and definitely we're going to continue to see more pressures there.
And how has this impacted the currency, and also particularly looking at the FX reserves for the country?
Yeah, so the FX reserves right now is 3 months import cover. That's around 2.75. So I think despite all the challenges, the Metical has been stable, low, and unchanged. For if you look, that has been almost for 18 months. However, there has been recent decisions that by the central bank, usually the fuel import for the country was 100% by the central bank, but now it's 60%, and this somehow could potentially, add some volatility for the currency. But we don't expect, let's say, aggressively huge volatility. It's likely to be a slow paces, right? From interest rate perspective, we also expect, central bank in short to medium term as well to hike rates on that angle.
Now, the other thing I'm quite curious about is we saw today, as a result of the recent, hiking decisions coming through from the Fed as well as the ECB, quite a movement towards emerging market currencies. And we've also seen movements, well, not necessarily today, but just in general with regards to government bonds. How is it for Mozambique in terms of the local government bonds? How's it looking at the moment?
So yeah, if government bonds are listed instruments, right? So investors, they can access, right? So what they've budgeted for this year was less what was budgeted in 2022. They've budgeted around $58. Last year it was 83 last year. So probably, this decrease is related to, they've been using as well treasury bills to fund the, government budget. But I think from issuance perspective, it has been range of 4 or 5 year tenor. In Mozambique, we have hybrid bonds, and yields have been around 20 to 22%, right? That is a multi-price auction, and investors can bid at discount. So
that's it from the Southern African team. It's back to you.
Thanks for the update there, Palesa. Up next, we have Ridima take us through highlights and stories from East Africa.
Thanks, Akin. Rwanda's economy is staring at accelerated GDP growth of above 6.2% as inflationary pressures subside amidst a rebound with key sectors such as construction, tourism and agriculture beginning to normalize. CNBC Africa's Abby Agina had an exclusive interview with the central bank governor on a day the regulator retained its key policy rate unchanged at 7%.
We are being hit by inflation. We said we are determined to take policy decision that will bring back inflation to our policy range of between 8 and 2%. And again, as we had indicated, starting from November monetary policy meeting, we expected to see inflation start going down in the first quarter of this year. Maybe had expected it to be faster than we saw it because we had expected agriculture to do better, though we still had reservations. But yes, still inflation has been going down from since December, slowly but sure. And this is mainly linked to reduced oil prices. So at least oil inflation has really gone down. And when you look at oil inflation has gone down to above 20 in December to around 4.4 now in April. Same with core inflation. Core inflation has been going down from around 15.7 I think in December to around 11.4 in April. Food inflation remains stubbornly high because of the poor performance in season A, so it's still about 40%. So our projection indicates that core inflation will continue to go down as international prices have been going down. So at least that imported inflation is really going down. Oil inflation will also continue to go down. And food, when you look at the weather conditions for season B, we expect food inflation to go down starting end May, June, as harvest kicks in from season B. So all these together, we expect inflation to go back into our range of H2 in the fourth quarter. And so the decisions taken over the last 1 year and so months from our side, decisions taken by government, have all contributed to this downward trend of inflation. And so we didn't see any need to tighten further because the projections are that inflation in the right path to go into the policy range that we want to have going forward. And even beyond going to 2024, we expect inflation to be below 5%.
All right. And Governor, inflation has remained as a stubborn affair for quite a number of economies, not just Rwanda. We're seeing other countries within Eastern Africa, they have also been tightening the monetary policy stance. And from listening to your sentiments, it seems like things are beginning to normalize. And how soon are we likely to see a further reduction in the rate as by your projections?
I think what we are seeing today is reduction in inflation. And so we still have global challenges, we still have uncertainties here and there. So as I say, we expect to see this going back to normal in end of this year and for the rest of next year, assuming nothing unusual happens. So we wouldn't start thinking of loosening today. Let's first at least achieve stabilization. Then depending on the conditions, then decisions will be taken going forward.
The Kenyan shilling has been on a losing streak, depreciating to an all-time low of 136 Kenyan shillings to the US dollar. What are the drivers of this fall and what is the net effect of the weak shilling? Earlier, we spoke to Churchill Ogotu, economist at IC Asset Managers, for more.
Looking at the conditions that has panned out over the last couple of years, we've had COVID, we have Russia-Ukraine war, and looking at the level of the Kenya shillings, if you look at the Kenya shilling against even the African peers, the kind of performance did not necessarily reflect or did not factor in the kind of external shocks that the global, the shocks that had played out in the global arena. So at the beginning of this year, or starting from late last year, we started seeing that the level of the Kenya shillings starting to reflect its fundamentals. Beginning of this year, we were at around 120 to the dollar. Now we are looking at 136 to the dollar. So there's been a sharp weakness on the Kenya shillings. And that, if I may take you back, is coming from a point whereby we have had a new regime in government, and the National Treasury senior management have been quite vocal in terms of letting the currency reflect its fundamental view. So that sharp weakness that you've seen, majorly at the beginning of this year, was well in line with what the new management has been talking about, that we need to see some at least the performance of the Kenya shilling to at least reflect the fundamentals of what has transpired in the global arena. The other thing is also there has been a restoration of FX interbank liquidity. That was there wasn't much activity within the FX interbank activity, but with that restoration of the FX interbank activity, that also led to some weakness in the Kenya shilling to where it is currently.
Churchill, we saw the Central Bank of Kenya increase the rates by about 75 basis points. Has this done anything to prop up the shilling?
Right now, it's a bit hard to tell. And looking at it from the perspective that from May last year, there has been a cumulative 250 basis points increase in the policy rate. So, and recognizing that monetary policy works with some considerable lag, it's a bit hard to tell that the latest 75 basis points has had an impact, but definitely there are some nuances in terms of what has happened against the monetary policy rate tightening in the context of the March rate hike here. So one of them is now the FX interbank was restored. The other thing was now the oil importation, whereby oil is being sourced by a few market players on behalf of all the other oil marketers companies. But rather than settling it in Kenya shillings and rather than settling it in spot, the settlement is like 6 months down the line. So we have seen like there's a demand reduction in the order of $500 million, at least for the next 6 months, but that's a bit of a short term. So having said that, and looking at the performance of the current Kenya shilling after the March MPC policy rate hike, and also considering that we had that oil importation deal, we have seen a weakness rather than appreciation of the Kenya shilling.
That's all from me now. It's back to you, Akin.
Thanks, Ridima. Now let's bring our focus now to the west of the continent. The International Monetary Fund, in its regional economic outlook for Africa, forecasts growth in sub-Saharan Africa will decline to 3.6% this year. The analytical notes from the outlook suggest that under a severe geo-economic fragmentation scenario, the region stands to lose the most. My colleagues David and Kenneth caught up with Catherine Patilu, Deputy Director, Africa Department at the International Monetary Fund, on details of the economic forecast. Take a listen.
Growth is going to decline this year for the second year in a row, and that's in the context of a big funding squeeze. That is the drying up of aid and loss of access to private finance. And some of the drivers then of the low growth this year include slowing global economic activity, which of course reduces demand for the region's exports. Now there's a lot of variety across the region, and many countries actually growth is holding up or seeing small pickups, particularly in those countries that rely less on natural resources. But the regional average is being pulled down, particularly by South Africa, where growth is forecast to be just 0.1% this year, largely due to the energy crisis.
Well, we still have a whole lot to catch up now. Kenneth is here to have the rest of the conversation.
Thank you.
All right, but Catherine, I'm curious about the progress we've seen with integration, and I'd like to know how the benefits of an increased regional integration through the AfCFTA and also integration into key global value chains have helped enhance the region's resilience and also to shocks that we're seeing, and also how can that also impact growth?
Thank you. So the Africa Continental Free Trade Area offers an exceptional opportunity for the region to realize what's really a vast potential for increasing regional trade and integration. How would that happen? Well, as envisaged in the agreement, you would see reductions in tariff barriers, reductions in non-tariff barriers, and enhancing the behind-the-scenes trade environment. That's logistics, customs, infrastructure like roads and ports. We actually released a report last week which estimates that median goods trade within Africa could increase by 53%, and that trade with the rest of the world by 15%. The trade integration could bring tremendous benefits for resilience, diversifying export sources, diversifying import sources. That is basically, not putting all your eggs in one basket. You could also see improvement then in food availability if you had more integration that would allow countries that are facing a climactic shock then and food shortages to be able to import from neighbors who are experiencing a bumper harvest. So there could be a lot of regional value chains that benefit from the trade integration in agribusiness or in manufacturing. And this potential for cross-border production linkages is really the backbone that we've seen in other regions to link into global value chains.
All right, Catherine, I also have a two-part question here. Talking about the face of the funding squeeze that you rightly mentioned there. At the last IMF SDRs were allocated in August 2021, and could we see another round of allocations in the near term if geopolitical tensions continue to escalate? And what policies would you advise to help sub-Saharan African countries to build resilience?
So there's no new SDR allocation in the pipeline. There was the 2021 historic 650 billion allocation, the largest in history, 23 billion to sub-Saharan Africa. What we are doing is working to make sure that those SDRs benefit as much as possible the poorer and more vulnerable countries.
There's great excitement and angst around the possibilities of what artificial intelligence tools such as ChatGPT can unlock at the workplace. PwC says companies must find, nurture and incentivize adaptable and skilled employees who understand the changing business landscape. Olushola Adewale, partner, people and organization advisory leader at PwC West Africa, provides insights into nuances and case scenarios to look out for.
AI has been around for quite a while. I mean, it's only become more popular in the last few years, but if you think how long we've had, even just your Google Maps and stuff like that, that told you where you parked your car when you came out of the mall. We've had it around for quite a while, but the popularity has grown rapidly in the last 5 to 10 years. And as you mentioned, we have artificial intelligence in different spaces. You have machine learning, natural language processing. And then, of course, lately, this generative AI, which is where your ChatGPT comes in. I think the best way to express the reach of this playground, if you think about how, ChatGPT acquired 1 million users in just 5 days, 100 million in 2 months. You can just imagine the impact in terms of productivity and efficiency among the workforce. So it's opening the eyes of many organizations to what is possible. And then, later I'd like to talk to you about the impact of all of that on jobs. So it's essentially just, technology that allows you to take, available information and generate content that could range from text to videos, to charts, to insights based on available information, and then you can use that for your organization. Yeah.
Mr. Adewale, let's also paint case scenarios in terms of how AI is going to transform some areas where we have concerns about job replacements within the short, medium, and long term. Take, for example, repetitive, mundane, and labor-intensive tasks such as scheduling, time management, and planning. We have AI so there might be some redundancies there. Let's talk about the case scenarios we might likely see, and then the role of effective policies to ensure that AI serves humanity.
Yeah, thanks. I mean, there are three broad scenarios that are playing out. The first is what you mentioned about jobs that will be replaced. And it's just the hard truth that those mundane jobs, I mean, if you think about it, even today, if I sent you an email inviting you for a meeting, if you have the right technology on your computer, it automatically converts that into your schedule. And you can actually just see it there. If you buy a ticket and you get an email with your ticket, artificial intelligence can translate that into your diary. So what you ask yourself is, what is going to be the role of my executive assistant or my secretary who used to do that before? That particular role might become redundant. But I think the biggest opportunity for us is the second scenario, which is that a lot more jobs will be created. The World Economic Forum actually expects anything from 75 to 96 million new jobs being created, new roles being created across the world. And that's a big impact for us. If you think about Nigeria, where, recent records from the Bureau of Statistics tell us that we have about 40% unemployment. So if people can get into new skills and pick up new capabilities, new jobs will be created. And then the last scenario will be jobs that will be augmented. So they're not going to change, but there are things that the job will now be able to do with the role of artificial intelligence. So if you think about your head of strategy, who now uses ChatGPT properly, for example, or other forms of artificial intelligence, then a lot of scenario planning can happen for the organization in a way that helps them to make intelligent decisions about the future.
On that note, it's a wrap on this week's show. Thanks, Palesa and Redeemer, for the regional updates. Join us same time next week for even bigger conversations. I'm Akin Obakeye. Do have a great weekend.